Hi, Steph. Thanks for joining me today. To start, do you want to maybe take a minute to just introduce who you are and what is PIN?
Yeah, well, thanks for having me. So I'm Steph. I'm the founder of PIN. My journey with PIN started so long ago. It's funny to look back, but the long story short is my background before becoming a founder was in venture. And then I went off to business school where I was fortunate enough to be pulled into a project that some of my classmates were looking into of how do we actually start a giant class fund for all of our classmates to invest together in our other classmates' startups. And I originally was pulled in because of my experience, thinking that we'd go to a lawyer and a tax firm and just set this up pretty instantly. But it actually ended up being like quite the challenge of getting all the logistics together for two main reasons. One is that we had 400 classmates, all who kind of expressed interest in joining. And then second is that we had a fair number of unaccredited folks as well who wanted to participate but couldn't fit in a traditional fund structure. And so for about a year and a half, we worked on essentially inventing a new vehicle and essentially now repurpose something called the investment club, which allows for more inclusivity, meaning unaccredited investors can participate while still being able to make startup investments. And after our initial fund launch in June 2020 and realizing that lots of other groups, schools, company alum, interest groups of all sorts wanted to use a similar structure, we have now built PIN to essentially serve as a better product and ops layer to do all of the kind of arduous, boring admin work we did manually, now automatically. And so that's a little bit about us.
Awesome. And so you started this company as a way to sort of solve your own personal need with your Stanford graduate class. I'm kind of curious now that you've been working on the business for a couple of years, why are you still excited about this opportunity?
Yeah, I think I'm really passionate about this. I was passionate about it before coming from a venture world, and I was working on this even before I became a founder. And now I have even more immense appreciation for this since becoming a founder, just because I think I've realized like how disconnected, and I don't want to say broken, that maybe sounds really dramatic, but how kind of like at odds the fundraising funding environment can be with like founders and VCs and the different incentives that they can have. And then there's obviously all those kinds of roles that I find to be really frustrating that really smart, passionate, intelligent people who are very well educated in the space, because they don't have a certain net worth, are completely ineligible from investing in startups. Meanwhile, obviously lottery tickets and other, investments, if you want to call them investments, are legal. And so a lot of these just like frustrate me. And I found that in my kind of wildest dreams of what PIN becomes, the way that we like to pitch it is that we hope that PIN essentially is what Robinhood did for stock investing, but for startup investing. We want to make things much more transparent, beautifully designed, educational, and frankly accessible. And that's why I'm really passionate, because I think we have a unique position now to kind of align incentives amongst multiple parties and literally create more founders and investors who are more aligned with each other and their missions versus kind of today's environment.
Awesome. And can you talk a little bit more about your positioning? So I know when you look at just like the startup investing market, there's equity crowdfunding platforms, there's syndicates, there's venture funds. I guess how do you, fit into, that ecosystem?
Yeah, I think where PIN shines essentially is we do all the kind of back end stuff specifically for community investing vehicles. So if you have a large group of mostly individuals, we have some groups that have institutional capital, but primarily we focus on individual investors of all sorts. We have a fair number of accredited folks, but we also have 70% plus of unaccredited investors as well. I stand by our product as kind of being the best and easiest platform to not only set up all the logistics, but to actually like manage that over time and actually utilize the superpower of having a lot of people in your community, hence our name, power in numbers. And so compared to a traditional fund, I'd say we're much more engaged. Community members are actually involved in choosing the underlying investments. They respond to founder requests and actually like value add much more commonly than a passive LP would in a traditional fund, even as simple as, responding to a hiring request, like actually offering people from my network that I know that might be a good fit for a job, or even as simple as, a company that we invested in is launching on Product Hunt tomorrow, like actually enabling our community to actually vote for that and promote it on social media. It's like a really powerful mechanism that even funds with, a lot of capital can't necessarily whip up very quickly because they don't have that kind of power of community. And then I think where we differ from equity crowdfunding, I'd say our missions are very aligned. I love what they've done from an inclusivity perspective and from an education perspective. I just find that there's a disconnect, not always, but commonly between the equity crowdfunding types of companies and like venture-backed companies. I think Reg CF, as much as I admire how much they've kind of pushed the needle on things, it's still very restrictive. And for a lot of founders, they're paying like egregious legal costs and spending a lot of time. They have to prepare extra financials and other documents in order to participate in Reg CF. And so frankly, a lot of venture-backed startups just don't participate, which is unfortunate. So I think the cool thing about PIN is that it kind of fits in more like a fund in the sense that we invest very similarly. We come up as one line item as a cap table. The investment process is very similar, and we don't also impose this kind of like more arduous kind of financial and legal constraints that Reg CF does on some founders.
Makes sense. I actually worked at equity crowdfunding platform WeFunder a few years ago from
I do remember that.
2020.
Yeah.
So I understand the space pretty well. I guess like when I look at your product versus like equity crowdfunding, I think the one big need that you're solving is like you're trying to control for that adverse selection aspect that equity crowdfunding platforms are unfortunately seeing. Kind of curious, like, how do you think about controlling for quality? Is it really just like making sure it's I think it's a closed platform right now, or yeah, how do you control for quality?
Yeah, I appreciate that question a lot. I mean, it's funny, like I think without a doubt, our long-term mission is that we want to empower any group of people out there who wants to form a group and community to invest in something that they know about or care about or really passionate about. We want to enable that super seamlessly. But right now, I think playing the super long game, and also with our limited time and resources, to your point, like we are really kind of focused on quality, and also like building both sides of the marketplace is kind of hard. And by marketplace, I mean, one is kind of like angel investors who are interested in investing, and the other side, like founders who are excited about accepting the capital. And so instead of having to build both sides of the marketplace in tandem, which is obviously every marketplace's problem, where our strategy is we're really focused on enabling communities that already have an amazing source of great founders to invest in, aka usually their own members or alum from their relevant group. So I'd say, especially that's why schools and company alum have been some of our biggest, most success stories, founder cohorts, and accelerator programs as well, just because they provide both the capital and also the amazing founders to invest in. And so speaking of quality control, I'd say that's really where we focus our time. And we accept like 20-ish% of like our waitlist signups, if you will, right now. And our hope is that we get that obviously much higher in the future.
Cool. And I wanted to dig into just the customer bit a bit more. So I know like any community is like your long-term vision. It sounds like you're looking for communities you mentioned that have like a great source to invest in. So school alums, accelerators. Kind of curious, like when you're talking to these customers, like what's the most attractive part of the offering right now? And yeah, what gets them sold?
Yeah, I think the biggest one is I definitely, was and still am the end customer. And I think one thing that my like banking and finance days has taught me is that I absolutely hate doing repetitive tasks over and over again. So like when I see something that's really boring that I've done multiple times, I'm like, how can we automate that? Especially since I'm also running still several of these communities that I started even before PIN. And so something that I'm super proud of is that we really do make it as easy as possible for leaders to do this. Like one stat that I'm super proud of is that almost all of our leaders, except for one, is part-time, meaning like they're busy founders, they're investors, they're operators with full-time jobs, plus many more, and they're able to do this on the side because of how easy we make it on the logistical back end. So I think that's one big part. I'd say the second part is around like the community and interest in investing. I genuinely believe that there isn't any better model, especially if you're new to angel investing or don't have your kind of built-in network, which very few people do, even if you've been in tech for a while or unless you're like a professional VC. This is an amazing way to do that. Not only do you get like an access to a great group of people who share a similar interest, but the groups themselves usually make like 12 to 24 plus investments, meaning you also get like a very diverse group of investments for one check versus, when you're making angel investments, like the common minimum check size I hear is like 5K, maybe 1K, but you're just not going to get that diversity and index of companies versus, if you were to invest in ETF of stocks, for example. I feel like PIN is the closest thing that I've seen to kind of creating a true kind of index of startup opportunities to invest in.
Cool. And then on the flip side, when you like reach out to community and they're not interested, where are you getting like the pushback?
Yeah, I mean, I'll be honest, I think our biggest challenge this year has been macro. I think kind of speaking to our strengths and like the communities that are the best fit for us, we have found, for example, company alum to be some of the most exceptional because everyone wants to emulate the PayPal mafia. And I feel like entrepreneurs, when they think about starting their own companies, they gravitate towards amazing companies that are growing really quickly. And so they are definitely, I'd say our top, if not our one of our top kind of major customer segments that we believe are the most successful and have proven to be most successful to date. But I think it's really hard when, layoffs are literally being announced every other week, and consumer spending is extra tight, things like that. And so it's this weird thing where I feel like more entrepreneurial talent is coming out of these groups than ever, in part because of need. People are losing jobs and therefore finding other opportunities or starting companies they might not otherwise would have. On the flip side, the kind of demand or the interest in actually investing right now is certainly like smaller and more, I think, measured than it was even like a year and a half ago, I'd say. So I'd say that's our biggest challenge from just like an overall perspective.
Yeah. What are some steps, I guess, that you're taking to adapt to that new macro environment?
Yeah, so something that I'm super proud of that we was on our roadmap anyway, kind of in our mission of being more inclusive. Historically, we hadn't ever been able to accept groups less than like $1 million AUM, which is a huge hurdle to have. Like kind of to give more perspective, our average check size is like 10 to 15K or so for an individual. So even to get to 1 million in AUM, that's quite a huge hurdle and quite a huge group of people to get. So the cool thing that we have found is that over the last or I'd say earlier this year was a bigger focus, but what we did is like we built a lot of a product and also got more diverse partners that were able to accommodate like a smaller AUM. And a lot of that has to do with like fixed costs that historically we haven't had a lot of control over, whether it's on the legal side or tax side, but a combination of more diversification of partners, plus like more automation and things that we've been able to do on our end to kind of reduce hourly rates on stuff, and also scale, like being able to negotiate with a much bigger group together versus like a bunch of different clubs and disparate, in their own individual form. I think a combination of all those things has enabled us to provide at a much better cost access to a smaller AUM. And so I think we're seeing a lot more groups adopt because the barrier is a lot lower than it used to be even like 9 months ago.
Nice. I think that's really cool. And I know like the initial communities that you onboarded and that were on your wait list, a lot of them were from word of mouth, from inbound, or just like maybe they saw like your TechCrunch post and they reached out and signaled their interest. Kind of curious, like what growth channels you've been experimenting with, and if you found anything that seems like repeatable or working for the future.
Yeah, I'd say two. One is more proven and one is newer, but we're really excited about it. So one that was really just kind of an experiment and really just started off as kind of like a team bet and for fun was actually posting on Twitter. So I've never been historically like a very public facing person, but I've come to love Twitter. It's where our whole audience is, aka founders, tech operators, VCs, etc. So we've been posting a lot, and frankly, I think I've never been like a very kind of like thought boy thread type person, even though I admire those folks who do it really well. So I tend to post a lot of like tech memes and like very honest takes about being a founder, very self-deprecating, things like that. And we've been fortunate enough to have like a kind of like a brand and virality around those kinds of tweets that have driven, I'd say, outside of word of mouth, like our biggest swath of kind of inbound waitlist. And then the second that I'm really excited about actually is I think I mentioned earlier, one of our main features that we are really proud of is that we enable founders to tap into their communities to help them with things, whether it's making it super easy for people to refer their connections on LinkedIn to a job referral, or if we're launching on Product Hunt tomorrow or want boosting for an announcement that we're making, make it super easy for people to post on Twitter or LinkedIn and distribute that. So we're using that also amongst our own communities, not only our own investors but also our communities. So we have a bounty that's permanently up there for referrals. So people refer someone who then starts a group, those people get rewarded, not only like recognized on our platform, but also monetary rewards as well. And we found that it's kind of fun that we get to both use our product and see our incentives work live, while also like rewarding our community members and kind of enabling them to be like some of our biggest advocates. So that's been really exciting to see.
Cool. And one way I know founders think about building their business is basically they want to like de-risk it. So it's like, what are the things they need to accomplish to make this business path more successful? Kind of curious, like, what do you see as like the big risks or challenges with your business still, and how are you going about thinking about trying to solve those things?
Yeah, I think to be honest, like one of the things that I constantly think about is how do we make this really sustainable for groups. Like I kind of talked a little bit earlier about how even reducing the cost to be able to support $1 million AUM to getting it down to 500K and now 250K has been a huge hurdle. And I think we're just chipping away more and more at that because there's a lot of factors at play beyond like the automation and stuff that we built and the scale that we built and negotiation. We've heard this even from legitimate funds as well. Like these funds last, sometimes up to 10 or 12 years. There's like a single one. And every year there are obligations that those funds have to fill, right? So we not only have to think about, okay, how do we actually provide great utility and like the compliance and tax and back end for this year sustainably, but also for like the whole perpetuity of its life cycle and be able to like promise that to our customers without, exposing them to the variability of labor costs and other things that might impact that over 10 years, which is a very long time. And so that's something that we're constantly figuring out, like how do we build our own like in-house product or bring in more teammates in-house to kind of make sure that we have more control over that piece of things where, obviously we're a relatively small team and leverage a lot of partners right now. So I think that's one thing for sure. And then I think the second one that keeps us up is it's a constant battle between like growth and then obviously like quality and making sure that like good actors, if you will, maybe are on our platform. Like part of the reason why we're still in waitlist mode rather than complete self-serve mode is like we want to be extra cautious that there's never a case where people are abusing our technology to scam people or other things. We take like the consumer trust side of things really seriously and know that we're in this for the long haul and building PIN into a brand that we want people to respect and trust highly, especially when it comes to financial investments. And so that's something that we're just unbelievably cautious about, just being very, very thoughtful before onboarding folks and vetting very extensively.
Awesome. And now I wanted to sort of transition into questions around the team. Can you just talk a little bit about the team right now and how would you describe maybe the culture at PIN?
Yeah, we're a mighty 7 people, still really, really small. And I think, I want to be small for quite some time. We do have some open roles right now, which is really exciting. But I think what I found is like a small, nimble team, and maybe this is a cliche that a lot of people talk about, but the small and mighty and nimble team really is kind of like one of our biggest superpowers. It's amazing to me still, like how fast we're able to respond to customer requests or kind of move with the times depending on different needs that come up. And I really love that. Culturally, I'd say we're mostly remote. We do have a New York presence, but in general, we're remote across the country and literally have people in almost like almost spread out in a lot of different cities, ranging from Boston, Nashville, SF, and more. But yeah, we have quarterly retreats. And I like to think that one thing that defines us as a group is that we are, I think, a great team, but also have like very strong kind of individual expertise. And there's a lot of trust amongst each other, meaning, the person that we have on our team who leads strategy and ops and tax is like our go-to person. And we believe in them highly for that. Engineering, kind of same thing. And so even though we have a team mentality, we do have a lot of trust in each other as individuals. And whenever we bring people on, we're literally looking for experts in their specific domain and give them lots of individuality and autonomy as a result.
Awesome. So you're looking for basically experts in their domain. Kind of curious about like what other characteristics are you looking for when you're trying to hire people?
Yeah, I think one of the biggest ones for us, just given by nature of what we do, is like detail orientedness. I think especially when we're obviously dealing with like people's personal capital and like such kind of heavy things, whether it's like legal or tax or other things, we really need people who are in tune with the details and who care about getting things right 100% of the time, not just 80% of the time. And I've been in roles where this isn't as valued of a skill, so you'd be surprised actually like an interesting thing to vet for. And then I think the second thing is like a lot of self-initiative. For a while, we joked about how almost everyone on the team was a founder, and it's not true anymore necessarily, but one thing I do love is that almost everyone on the team has like some sort of entrepreneurial experience, whether as a founder or some kind of side hustle or project where they decided they wanted to learn about something and explored it on their own. I think that's like a really powerful signal when people show a lot of self-initiative and autonomy to do something that they're passionate about because they wanted to and not because, a boss or manager was telling you to. And so I'd say those are two of the other traits that we see or look out for in teammates.
Cool. And can you highlight some of the roles that you're planning on hiring for either now or early next year?
Yeah. So one we are looking for right now is adding another engineer to our team. And so something that I'm really excited about is our product to date has primarily been web. We do have like a mobile friendly interface, but it's not an app yet. And so something that we've been highly requested is to build out a mobile app so people can use it a little bit more frictionlessly. That's a word. Similar to how they would with like messaging or other things. So we're looking for someone for the engineering team, particularly who's strong in mobile. And then the second one I'd say is we're looking also to build out our content and growth team. So like I mentioned to your earlier question, like one of the biggest drivers of growth for us really has been content. We've leaned into more humorous content, just given kind of like my inclination, but someone who is really passionate about tech and VC and interesting facts and data. Someone who is like excited about working with founders and writing about them and digging up really interesting stories, who can kind of balance out the more like fun kind of persona that we've built to date on the content side, I think is amazing. And so we're also focused on hiring a great head of content in that regard too.
Awesome. And last question to wrap us up. I mean, for a startup to win, it has to be really big. So kind of curious, like what needs to be true for this business to become very big?
Yeah, like I mentioned, our whole goal is to be like the Robinhood of startup investing. And so in order for that to be true, we need to get out there. I think, like I mentioned, our near-term roadmap is really focused on like a few key segments of communities that have kind of both sides of the marketplace, both like people who are excited about investing and also people to invest in. And that's why we're kind of focused on, frankly, a lot of tech folks and people who work in tech or who are founders themselves. But our bigger vision beyond that is like literally any interest group or hobby, geographical area, whatever people are passionate about, enabling any community to kind of come together to invest in the things that they uniquely have an interest or passion for is what we want to enable. And so step one is knocking this part out of the park, but then it's kind of going out to everyone else beyond tech and advocating for why aligning investing with companies that you care about is great, and then actually making that happen.
Awesome. Great way to finish. Thank you so much, Steph, for joining me today.
Yeah, thank you. It's been fun.